Hey folks, CA Rachana Ranade here, and I welcome you all to a very interesting IPO summary video of TruAlt Bioenergy Ltd. Now, what does the company do? The company is into the production of bio-based fuels and derivatives. I'm sure you might be like, what are bio-based fuels and derivatives? Simple. Let's understand one by one. Whenever I'm talking about their products, first thing that I'm sure came to your mind might be ethanol. Okay, because that is one bio-based fuel which is known to a common person. But do they manufacture only ethanol? Answer is no. They also manufacture ENA, which is extra neutral alcohol. They manufacture CBG, which is compressed biogas. I'll also show you one or two more products, something like dry ice, which is one of the valuable byproducts of ethanol. That is also what they manufacture. They also manufacture liquid carbon dioxide. All these products are manufactured by whom? By TruAlt Bioenergy. Okay. Now they manufacture all this from single feed based stock. I'll tell you what is this in the later sections. But right now, just remember this. Okay, okay, they are manufacturing all these bio-based fuels derivatives. Agreed. Whom are they selling it to? They sell it to OMCs, that is oil marketing companies, under the government's EBP, that is ethanol blending program, and this is done via a tender driven process. So what will OMCs do? They will buy ethanol, they'll blend it in the percentage which the government has told them, and then they'll sell it to people like you and me. But for this company, TruAlt Bioenergy, agreed, they are selling to OMCs, but from whom are they sourcing the raw material? 100% of its feedstock requirement is through long-term supply agreements with promoter group companies. What is a positive point in this? That problems about shortage of supply and this that generally would be on a lower side, because 100% of its feedstock requirement is from their promoter group companies only. Okay, now let's dig down a little bit more. Like I told you, it's not only ethanol, it's way more products than that. They are diversifying by entering into different production processes, and different products. Now if I'm talking about one more product that they're focusing on, that is CBG. And what is CBG? I just told you right now, CBG is compressed biogas. Now they have entered into a JV, they as in their subsidiary, which is Leafinity Bioenergy Private Limited. They have entered into a JV with GAIL to set up multiple CBG units across various locations in India. Now, not only have they entered into a JV with GAIL, they have also signed an MOU with leading Japanese trading and investment companies and Japanese gas company to establish a JV for what? For beginning 3 to 5 CBG plants across India. So basically, they are forming alliances with GAIL, Japanese companies like Sumitomo, for what? For bringing in world class technology, capital, as well as expertise. One more interesting point is that they are also expanding to sustainable aviation fuel. See, when we talk about decarbonization, when we talk about lesser polluting fuels, we talk about filling these fuels in two-wheelers, in four-wheelers, but what about aviation fuel? And for that, this company, TruAlt Bioenergy, is strategically also entering into this SAF space because of this global mandate under Corsia scheme, which is accelerating decarbonization. So all in all, company intends to set up this SAF facility with a capacity of 10 crore liters annually, which may place it in the world's largest producers of SAF from ethanol. Now, if I'm talking about the overall capacity, ethanol and ENA, you can see installed capacity has increased from 1400 KLPD to 2000 KLPD financial year ending 23 to 25. Their actual average production has gone up from 403 KLPD to 628 KLPD. If I'm talking about CBG also, the installed capacity remains same, but the actual production has gone up from 14 lakh 50,000 KGPA to 29 lakh 29,460 KGPA. So is it also increasing? Answer is yes. Ultimately, let's come to the business strategies point. I think I've told this 2-3 times, but of course, they are expanding beyond ethanol. Main thought process could be reducing over reliance on any single product or policy. Now they are also doing technological integrations. Right now, I told you it's a single feed that they are working on right now, but they are building technological integrations through which they will that will enable them for a dual feed ethanol capacity. Now, what does this do? This provides them flexibility to switch between what? To switch between sugar derivatives, which we can make ethanol, to food grain based raw material, something like maize, wheat. Now listen to this: damaged food grain, from that also ethanol can be made. Rice unfit from human consumption, from that also ethanol can be made. So they are bringing in more technology for all these advancements, and ultimately supply chain strength is what they are looking at, so that it ensures consistent access to feedstock and also supporting farmer incomes. Now let's go on with the industry analysis. First things first, ethanol market. This is expected to grow at a CAGR of 17.7%. And overall, the major demand driver is obviously the EBP, which is the ethanol blending program by the government. And this is going to bring a boost for this entire sector. Overall market share of TruAlt Bioenergy in this space is 3.6% in terms of total installed ethanol production capacity. And if I'm talking only about sugar based ethanol, then it is 7% market share for this company. Now let's talk about compressed biogas. Here, this entire space is expected to grow at a 6.3% CAGR, and this entire space will support from schemes like Satat scheme and also mandatory CBG blending initiatives. Now, if I talk about the financials, overall revenue, total revenue, all these numbers are in lakhs, by the way. So 76,283 to a jump of 1,96,852 from financial year 23 to 25. Of course, as I mentioned, rupees in lakhs. This translates to a CAGR of around 60.68%. If I'm talking about PBT, restated profit before tax, again, you can see a good jump, 4,898 rupees in lakhs to 15,944 now. This also translates to a PBT of around 80.4%. So overall financial growth, top line, bottom line growth, both are good enough. Talking about the key risks, like I already told you, one of the key risks is high dependence on government of India policy. If there is a change in government policy, it can significantly impact companies' revenue, operations, and financial condition. But I think how they have tried to mitigate this by reducing the product concentration. How can that be seen? Now, if you see your sale of ethanol, and we are talking about a percentage of revenue from operation, so that at one point in time till 2023 was 91.92%. Okay, and this has come down to 79.57%. So the company is basically trying to diversify and trying to reduce this risk. Second one is customer concentration risk. We did talk about this. They sell majorly to OMCs, and top 10 customers account for 99.26% of the revenue from operations. One more risk is related party transactions. A total number amount, if I'm talking about amount, that accounts for 61.93% of revenue from operations. You might be like, so why would this number be high? If you remember, I had already told you that they purchase their raw materials, basically their feedstock, from whom? From their group companies only, and that could be the reason why this is at a higher side. Talking about litigations, nothing much to talk about. If you want, you can just pause the screen, look into it, but I don't think something to specifically talk about per se. Talking about peer comparison, key peers which have been given in the RHP are Balrampur Chini, Triveni Engineering, and Dalmia Bharat Sugar and Industries. There are, in some cases, either or of the company is at number one or number two. If I'm talking only about TruAlt, there are 3-4 parameters that I can look at. ROE, they are highest amongst the peers. ROCE also, they are highest among the peers. If I'm talking about EBITDA margin also, they are highest among the peers. And if I'm talking about production capacity, basically ethanol per distillery capacity, KLPD, again at this parameter also, they are highest as compared to its peers. Well, talking about the valuation, company's PE at the pre-IPO comes at 23.89, exactly same like Balrampur Chini, what is given in the RHP. Triveni is at 33.07, Dalmia Bharat is at 7.75. Well, industry average comes to somewhere around 21.5, right? Talking about objects of the issue, I'll just tell you the split first. Out of the total issue size of 839.28 crores, 750 crores is fresh issue component, huge chunk of the total issue size. OFS is around 89.28 crores. That's where promoters offload their stake. But what are they going to utilize this money for? Major part goes to funding their working capital requirement, but one important point goes to funding capital expenditure towards setting up multi-feed stock operations. If you remember, what is multi-feed stock? What can they use as raw material? Not only sugar related components, but also something like utilizing grains as additional raw material in ethanol plants. If you remember that damaged grain or which is unfit for human consumption, that also they are now incorporating. For that plant, they are using this as capex. All in all, issue opens on 25th of September and closes on 29th of September. Price band is 472 to 496, lot sizes 30 shares per lot. I hope you found a lot of value in today's video. Try to do a quick summary of a big RHP document. And if you did enjoy the video, please don't forget to smash the like button. Please don't forget to share it with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.